The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here noon until 1 p.m. Monday through Friday, and on this 25th day of September, wrapping up the week, wrapping up the month. It's going to be a very interesting week. So let's just do the nitty-gritties, and thank you to our hosts earlier on. Let's try to keep up that high standard. The Dow is down 90 at 22,259. S&P is down 11 at 2491. Comp index at this point down much sharper. It's down 73 at 63.53. You got the VIX index finally running quite sharply up 138 at 10.97. That's a big move. And we'll discuss this whole thing in a moment. Let's just go on to the QQQ. The QQQ, very sharp decline from the peak D, top 146.59 going into September. And then what happened? Made an exact, to the penny, double top at 146.59 on the September the 15th. And that was also a peak D, double top in the weekly chart, an alternate count, and here's the 120-minute chart, making a beautiful arch formation at a peak F, goes all the way down. We're in the 142.43 area, down $1.90, minus 1.32% on the day. That is a big move. Couple of things. Could we repost the chart? Let me just do this. Give me 1 second here. Let me get out of that. I'll do it again. Click, 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 and there you are. So let me just run these down. So you've got the, let me start off again. E-mini trading down 10 at 24.88. Had a peak C there. I said there was a chance I could have had an alternate count with a Chapman Wave phantom peak at the high of the 18th of September at 25.06, round number. 25.06 again on the next session, the 19th, and then it squeaked a little higher to 25.0725. So yes, they could. I'm not going to do that right now. The MACD was good. Stochastic is still at 89%. Strong down candle. It's a heads up that you've got to be careful. I've been talking about that for a week now, saying that it's just the Dow that I'm expecting, and the SPY are the two that need to get to a D. The diamonds already did the D, Dow diamonds, and the SPX cash went to a D. So this is just a kind of this is what I call the aftershock. It is as if you're looking at the residual of a move to the upside, and like a rogue wave where there's just one wave that didn't see the sign that said high tide at noon, and at 12:05 p.m. it's just spikes to a higher high on the beach. Okay, so the 120-minute chart did test 24.86, the 200-period exponential moving average. Now let me just get this away here, because what I want to show you is there are a bunch of things. Being Monday, the first day of the week, I'm going to take a little time to explain everything, just as I did on Friday. There we go. Okay, here we go. So the Dow. Let me do that again, because evidently the charts weren't showing correctly. That peak C in the daily chart of the Dow, as I say, the diamonds, DIA, made a leg D to the upside and then a peak D. Now, we were long. We got stopped out this morning for a profit, and so now we have no position in the Dow. But what's really important is it would be very unusual to go to an all-time high to peak C in the Dow daily, and then to kind of drop sharply. But I'm not fighting this at all. In fact, we have long positions. We have a lot of long positions, only long positions, and they're all doing extremely well. In fact, one was up about 26%, maybe it's up 22% now this morning. General Motors stock is up. Even now it's up. It's at 40.26. We're in two positions starting at 34. These are doing very well. So I'm not. I think this is another rotational correction. I'll get into it in a moment. Let me just show you the parameters I'm looking at. 22,170. A break underneath that says that the Dow has tested the high of August the 8th, the previous all-time high, 22,179. And at that point, we've got to look for other things to happen. But at this point, we're holding the 9-period moving average right here. Maybe it's a point or two lower, but we're kind of at that level for the first time. And that says that there should be a little bit at least of a bounce above it. Not fighting it. I'm just saying this is what I'm expecting. We are starting to prepare for the short side, and the reason being, and I'll get into that. If you look at the SPX.X, this is the S&P 500. Look, that did make the peak D, and the MACD is turning down, but still strong. Stochastic say 89%, still strong. On balance volume has made recovery highs, still strong. And the weekly chart made a doji candle. I've got to respect that from last week. A close below last week's low of 24.9654, we're 6 points lower than that right now, would be a negative, and say you could test 24.74, the 9-period moving average in the weekly chart. And I said in the Dow, I don't see much more to the upside than just a nominal new high. So as I said, I'm not going to be fighting this, and as long as our positions are doing well, that's really the most important thing. Now we can go to the QQQ, and I'll show you what I'm looking at. This double top, and I drew in that arch formation, always a very heavy chart formation, because if it takes out the left side low, that dreaded H pattern, if it takes out the 143.60 from the 5th of September support, that's very negative. Boom, look what happened. We're at 142.38. But we're holding the up trend support line right now in the weekly chart, but the MACD is not good. Stochastic is good at 83%. And the monthly chart is still very strong in leg C. So now let's go to the SMHs, which are very important. The SMHs led the way up, could be leading the way down. There was a doji candle I said be a little careful of. 92.90 was the top. Then it was a Chapman wave 2-bar reversal, 92.90 to 92.84. That is, in my parlance, Chapman wave 2-bar double top formation, and now we're under the 9-period exponential moving average, and a doji candle at the peak D/C from last week. So we've got to be very careful now. The reason why we didn't add any longs to the position. Now I want to look at something that's very important. The New York Stock Exchange, I had a question about the New York Stock Exchange. The New York Stock Exchange has a leg E this morning, and the MACD is very strong. Stochastics at 94%, very strong. Weekly chart F/C, monthly chart leg D. I'm watching this very closely. Why? Because in the next week, if there's a close below 12,000, this is 12,114 right now, I have to contend with the fact that the daily chart is probably going to go from to a sell signal, and almost immediately it could be a sell mode. And if that's the case, I've got to watch that weekly very closely, because 11,974 is absolutely imperative to hold. And now the Dow's down 102, S&P's down 12. So I got to be watching this whole scenario. Question then, October is the month of peaks in the indices. Yeah, we're going to be watching this very closely. Now let's go to gold. Gold had a nice turnaround to the upside. It's up 10. Didn't take out the low of 2 days ago. It's hitting the 9-period moving average resistance at 1308. Is this a bounce, or is this actually a trend change? I'll talk about that as soon as we get back. Basil Chapman, Tiger Technicians Hour. Dow is down 104, S&P's down 12. We'll be right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, folks, we're back. So I'm talking about gold. Gold stopped right at 1311 was is the 9-period exponential moving average. The MACD is very weak. The stochastic's trying to flatten out to 13. I'm treating this right at this moment as a pop-up. I don't think we've got the real turn yet for the upside in gold. I think there's still chop with slightly lower lows and slightly lower highs. I don't think, in fact, the bulk of the down move might be done, but I think it's time that we're looking at. So this is the gray A, in other words, just a pop-up that I'm thinking it is. It could go on for another day or two, but I want to go through the scenario because the weekly chart on gold is still very strong, but the 200-period moving average of 1285 looks like a magnet at this point, and the monthly chart is okay. It's not great. So treating it as a brief bounce before doing some retesting. Silver's the same thing. Silver also didn't make a new low from 3 days ago. It's slightly above it. It's rallying. It's not great. It's looking okay. It's a 17.08 up 0.09. And the weekly chart is not nearly so good, and the monthly chart is not good at all. So that's going to be interesting. Now, crude oil, I need to do this because crude oil is in a very sharp leg deep, pushing away from both the 200-period exponential moving average, the 9-period exponential moving average, and the daily. This is orange is the 200, 9 is the black is the 9-period moving average. The 200-period simple moving average or smooth moving average is right there. It's above it at 51.66. Leg C in the weekly, and the H probably going to an M pattern in the monthly. So this is very important. In the 120 minutes, going to a D. So this we're going to watch closely. A couple of things going on. One is if you look at USO is doing very well. Same thing. This is in leg E. Also, everything's above the different moving averages in leg C in the weekly. Now, if you look at HO, and I was asked about HO, which is heating oil. So Julie wanted to know, it's the highest level since 2015. Yeah, this is A, B, this is leg C in the monthly, this is leg C in the weekly, and it's F/B in the daily chart, looking very good for heating oil. Are we going to get a cold winter? I'm not sure, but this is very good. Now, if you look at the, excuse me, I was asked about Valero. Valero has had a whopping move from the 64 area to the 74 area. And the weekly chart is in leg C. But look at this monthly chart. It's got this cup and handle going back to 2007 when it hit 76.78 back in July of 2007. Comes down to 13.94. That's a whopper of a decline. Was about 89, 91%. Goes down on the 11th of November to 13.94, and now it's worked its way up to a peak F that was formed under the previous all-time high. That was at 73.88 back in November of 2015 with the Chapman wave 2-bar reversal. Comes down quite sharply to the below 50, and now it's trading at 74.90 in gray leg B. I've got it as gray leg B, but I got a feeling that I'm going to have to call this. I'm keeping it as a gray leg B, a G/B, as it stands right now. G/B. Excellent action with the technicals all confirming. So that's Valera trading at 74.91, up 62 cents, but it is a leg D in the day. He said it's getting a tad overbought. We'll see what happens after this. Now, I need to talk about a couple of things here. You've got high-grade copper, which is still very weak at 2.93. I think high-grade copper is going to go under 2.9 again. It needs to do some further testing of the 2.80s probably. But it's had a big move to the upside and then a big move to the downside. Left side price time match says that it's got until tomorrow to try to test important 2.8985 support. And then I miss TLT. The TLT is rallying very sharply here. It's up 87 cents at 127.07. iShares 20-year Treasury bond ETF. This is a bigger move than normal. It's almost trying to fill the gap. Or did it fill the gap? No, it hasn't filled the gap. The low of the 11th of September was 127.26, and today's high is 127.27. Whoa, it filled it by a penny. Amazing. Is it going to go to a leg D in the weekly? We'll see. Now, my contention has been that the bonds had made a peak D in the TLT, only a C in the weekly chart, and that I expected that it could test 125. That's the 200-period moving average, orange color in the daily, and then we'd be ready for a bounce. But I'd also said I expect bonds to rally if this market starts a deeper correction. Dow's down 103. S&P's down 12. The composite index is down 80. So is this the move that's going to start it off? Well, we need to look at a couple of things. The XLF, which has been on a tear to the upside, down 18 cents at 26.25. It just looks like a consolidation right now. It looks to me like it wants to go to 24.60 or higher, and that'll be leg D in the weekly chart, extend leg E in the monthly if it's this week. And the question came up about KRE. KRE is the S&P Spider Regional Bank ETF. It's in leg C. Yes. So the question was, should I be adding or a buyer? A buyer. Oh, Basil, I'm a buyer of KRE stocks on any pullbacks. Am I wrong on this? No, I think even if rates start to decline again, I think the move up has really got the bank sector energized just for now. I think they're going to continue to hold very well. So, yes, I wouldn't get too carried away, but I would definitely be doing some adding to your positions. But as I said, I wouldn't get carried away because I think there are going to be opportunities, sudden opportunities, and that's really what you want to do. So one is preparation, and the other is expectation. So I do believe that the XLF is an area a little more than the KRE, but the XLF, the weekly chart, is so much better than the KRE that I think the S&P Select Financial Spider Fund is actually going to do quite well. Now I want to put something together, tie the whole thing together. And what I'm looking at is I still see rotational strength. Yes, we've just gone in a stair-step move to the downside. Every wave is a selling wave. But have a look at this. If you've got Apple, which is already at a big move to the downside from 164.94 down to 149s, it's a 20-point move. So that's, 18% or something. But the pattern we're looking at says cup formation to arch formation. Think a sine wave. You've come from the rounding bottom to the rounding top. You're coming back to the midpoint. So I'm going to be watching Apple. I think Apple is getting ready for some kind of a bounce, and how that bounces is going to be very important. If you look at Google Alphabet, Google, big move to the downside, 1.87, down 17 at 9.11. Now, it's made a peak F-top in the daily, a peak D in the monthly, and the weekly and monthly, and the daily made that peak. This is very unusual. It made a peak G in the daily chart. There was an alternate count, and it really was a perfect G. I should get rid of that B because it really was a G. And that was the alternate count. And that says to me, there goes the bell. And that says to me that there is a sideways correction unfolding in Google, and it targets at 910, it targets the 885 200-period exponential moving average. But I think it's going to be a little bit more orderly than this inverted V that just has a big plunge. So we'll be looking at that. We'll be looking at Netflix as well when I get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. So the Dow's down 90. There's an expression that I've used for a long time, and that is, for a bear phase, every opportunity to rally has to be wiped out, and the market has to reverse back down, and you need strong double-digit down moves in the Dow, and sometimes triple, and a strong double-digit move in the S&P, -12 to -16. Rallies fail, and you close at the low of the day. If we're about to go into that phase, we'll know by today, because Friday saw a turnaround in the overnight, Thursday into early morning Friday, and then Friday there was a rally that closed pretty decently. So I'm of the impression right now that this rotational market still has some residual energy for the upside, but now you can start looking at shorts probably working for a little while to come. And you can see, look, Netflix down sharply, made a Chapman Wave 2-bar reversal, 189.85 on the 22nd of September. Next day, 189.75, 10 cents lower, and then a sharp down move today. And the MACD is just about across negative. Stochastic still strong at 84%, and that should give you some strength, but it isn't today. And that's why it's so important. If you're looking at Facebook, spectacular winner for the last few years, gone from the 18 low to the 175, what are we at? 175.49 high on the 28th of July. Makes exactly that same pattern. Look, there it is. Goes sideways, tries to rally, makes an arch formation, the dreaded H, takes out the left side low. Today took out the left side low. So this is, I'm going to go to the daily, and the daily is peak E at 175.29, tries to make that rounding top just the same as what was the stock we looked at earlier on. I think Apple did the same thing. And then it goes to the right, same thing here. A minus pulls back after that peak D, and a leg after the upside in the monthly chart. So I'm not being sanguine about this one iota. I just needed everything to fall into place in a certain way, and so far it is. There's still plenty of time. If you're thinking of shorting because the market is going to go down into mid-October, you'll have plenty of time. So you don't have to panic. You're missing anything. After all, what we've done in the IWM is we made a new high today. And a new all-time high in a leg E in the monthly chart. I don't know what this is, a G. It's like an inverted V. This is what we used to call, when I used to do my Master Trader series, we used to call this the Groucho Marx eyebrows V-shaped double top, and then it pulls back quite sharply, and then it'll try to rally. So this is it. If IWM, the Russell 2000 trading 143.94 down 36 cents, takes out in the next week, takes out 142 as supports, only 2 points away from the downside, should do that quite easily. If it does that, I think there'll be a deeper correction, but we'll see where we close. If we close the day down only 34 points in the down instead of 134 points down, down 5 points in the S&P instead of minus 15, we're at minus 10. That's going to be a positive. We'll see. Day's young. We're going to go to Rich in Portland, Oregon. Rich, how are you?
Very good, Basil. Thank you for taking my call.
My pleasure.
I've listened recently, and I knew that you were into a position of a product called TWO.
Yes.
And I was looking at another product similar to TWO, and the symbol was NRZ. I was wondering what your chart technicals were showing you on NRZ, if it was a possible entry here.
So, first of all, how did you come by this? Is this kind of on a list, or you were looking in the same sector? How did you come about? The NRZ, folks, is what is this? New Residential Investment Corporation trading at 16.86, down just 3 cents today. So how did you get to this?
I looked through I'm with TD Ameritrade, and you can click on a tab called Peers.
Ah, good.
And it will show up similar industry type companies. And that's
Very
where I
good.
discovered, TWO, and then found NRZ, and then I found others too.
And they're all holding quite well, right?
Yes, that's what I was noticing was, with all this volatility, they seem to be hanging in there without the volatility, at least at the moment, even though
I was going to say, right.
subject to interest rate problems.
Yes, and interest rate, they could be affected by the interest rates, but what's really important, let me just finish the notation, CD, there's going to be an F. Let's start fresh right here. Then we're going to go, I'm just doing a quick notation, ABC, okay, right there, DE, and then it starts fresh again. You see there's a very nice pattern that's forming here. Okay, so trading at 16.85. The one that we have for subscribers is TWO, which has the same, pretty much the same thing. But that's the weekly chart. It looks very much like the same. So, so this is what I want to discuss. Since you brought up TWO, which is it is called Two Harbors Investment Corporation, a REIT management firm. That's the reason why I liked it, because it's more in the management part of it. Had a low of 6.91 in January of 2016 and a high of 10.54 earlier this year. Then it pulled back to the 9-period moving average at the 950-ish level, trading now at 10.21. And one of the things I've liked about it is the steadiness, just as you said. Now, I'm not sure this is going to be a huge breakout yet. It seems to be building for something. I just don't know yet what it is. Now, what I want you to bring out is the very quick peak A to B to C to D, leg D again today. Yeah, D was 24.24. So it's a double top so far. And that says to me, especially since it's under the previous peak G of 10.26, that I need to use this a little bit as a benchmark and say, okay, holding well, not really breaking out, nice percentage gain, but not actually for a peak D. It's done it very quickly, and in percentage terms, it needed maybe another 30 cents, and that would have been great. But right now, nothing to complain about. So let's go back to your NRZ. NRZ, now keep the eye on the 3. This is the daily on the left, weekly is in the middle, monthly on the right. Here we go. You'll see that the pattern in TWO is somewhat stronger. So I'm looking at it and I'm saying, okay, this is only in a leg C. It is pulling back today 4 cents. The MACD is good. Stochastics at 87%. The weekly chart is improving. So this is what I'm going to suggest to you. And I should also have a look at the peer group. One of the things that I like about this particular one is that it's shown that it's using the monthly and weekly 9-period moving average very well, and that's supported at 16.59, and that's only less than 47. Oops, what's the time? Oh, we've got plenty of time. So you know what I'm going to do? I want to do a little bit more work, just looking at these two, and then I can discuss it, because I don't think there's a rush right this very minute to time it to the minute. Let's look at it and see what is the potential for the upside, what's the potential really for the downside if it starts to fail. I'll be right back. We've got Rich in Portland, Oregon, looking at NRC down 92.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back, and we're on with Rich in Portland, Oregon, and I thought, during the break, perhaps pearls of wisdom will come to me. I'm looking at this and I'm saying this is quite a tough one in the sense that I like it. I don't like the fact that it's still a little far from the 17.20s previous peak E high. It's at 16.86, and it hasn't broken the resistance line in the weekly chart on this NRZ, which is the New Residential Investment Company. So this is what I'm going to recommend. I'm going to make 2 choices here. One is you just start. It's not going to do very much for you if you're just going to get a small little position and kind of wait, because obviously you're looking at dividends, you're looking at a lot of other things, and you need numbers to be able to get that. But I'm going to suggest to you one of 2 things. One is you could just start a position here at 1685. I think there's pretty darn good support all the way in the 16s. So the risk is really slight, at least for the next 3 days. And if it goes to the 17 area, that's going to be very positive. That's where I might even recommend starting to add. But the other thing is to maybe wait a day or 2 just to see how it pulls back, or if it's going to pull back. The trouble with that is if it doesn't pull back, it's a 1685, and out of the blue, you're looking at it this time tomorrow, and it's trading at 16.96. Now you've got to make another decision. So I'm going to recommend, I prefer the look of TWO. If there's a choice, I'd rather start a small position in TWO, even though it's in leg D, knowing that you're really waiting for a little bit of a pullback to add to it, just because it's a better chart. And sometimes you want to go with one that's leading rather than one that's following. And in this case, NRZ is following. So I'm going to say if you are interested in it at 16.86, I mean, the difference is not that great in price, but I am going to say to you that this one doesn't, it still has work to do to break out, whereas TWO, it's really done it, but it hasn't pushed into the 10.30s, which is really what I want to see. And that's a point and a dollar and a $1.10 higher. So my preference is for this TWO. It seems to have a longer history that I can look at, and all it needs to do really is to go above 10.2, close above 10.26, which is not a big deal in terms of numbers, because that's only another 5-6 cents, and then you're looking at something that shows that it's making the cup formation with a potential breakout as the weekly chart starts to improve. That's the one. And there, I would still only start a small position. And since I'm following it all the time, you'll be able to, you'll be able to see what it's doing. But out of the 2, this is the one that just figuratively in a pattern formation, I like a little bit better.
Okay, Basil. I appreciate your analysis.
Thank you very much for calling, and thanks for pointing that out. I'm going to make a note of it right now, NGZ. Thank you, and good luck with it. Let me know how it goes. Sorry, okay. NRZ, and let me know how it goes. Thank you.
All right, thank you, Basil.
Fine.
Goodbye.
Bye-bye. So, folks, let's do this. I wanted to just talk a little bit about the current market conditions. When you have the QQQ dropping so vigorously, still within a rectangle formation, in fact, a high-level rectangle formation in the weekly, I have to say to myself, if you've got to move from 148 to 142, 4 points, about, say, 3%, 2.5%, 3%, and you've got the Dow and the S&P only down 80 points in the Dow, -8 in the S&P, that is speaking more to me about rotational factors, that the weak sectors are money's coming out of the weak sectors. And if money's coming out of the weak sectors and going into the stronger sectors, then I don't really want to be messing around by looking at just extrapolating from the one piece of data, one sector, and saying, oh, everything's going to go. It's just not working that way right now. By tomorrow it might, but we haven't got -12 to -16 in the S&P, 120 down. The day's young. Anything can happen. But I'm looking at this and I'm saying, you know what? You remember last week I had a question about Caterpillar and I said, oh, there's a peak D. And then I looked at it again on Friday when I was asked, and I said, oops, it's got the E. Now it's a little bit more vulnerable. But look at that. It has made an island, a spike to the upside. So there's that gap. Tomorrow there could be a gap down. But then that would be selective. If you're looking at Deere in the same area, Deere hasn't got as good a chart pattern. It filled in the previous gap. It went all the way from the low that was made, the gap started on the 17th of August. It closed at 123.60 the next day. Bam, 118.41 is the high, 5 points high, 5 points lower, and 112 is the low, 112.87 is the low, right on the 200-period moving average. And what does it do? It has a great move to the upside, fills the gap, and this makes Deere tractor and equipment. It makes it demonstrate. It allows us to see a demonstration of how a volume, explosive volume move to the downside, like you saw in Deere on the 18th, can give what I call a Chapman wave volume price low, which should go 28 days to the upside before it comes and retests the low. And if it holds very well, it can actually go even longer. It can go double that to 56. So look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 18, 19, 20, 21, 22, 23, 26, 27, 28, 29, 30, 31 or 32 days. Fill the gap, doing very nicely. It's only down 34 cents today. So this is part of what I'm looking at, the rotational correction. And if you're looking at TRCCI, which is one of the reasons why we have a commodity index, that the commodity index we chose has in fact a weighting, a nice weighting in the oils. It's in all the different commodities, but its weighting is a little bit more percentage-wise in the oils. And when we got into it, I said, let's be careful. Although I'm expecting some kind of an upturn in crude oil, it is weighted, and if I'm wrong, it's going to pull back. Well, it's actually running very nicely. Even today, it's running very nicely. So this is a very select move. So here I am. I'm looking at the commodity index, and I think, okay, crude oil. Meantime, crude oil is the one that's helping our ETN. It's not an ETF, it's an ETN. So, Basil, how far can you go back in a commodity index? I can go back a long time. This goes back. Let me squeeze it, and you'll see. This is the Reuters, Thomson Reuters Continuous Contract Commodity Index. It goes back to the high of April of 2011 at 690, to the low of January of 2016 at 351, to the high that was 614 back in July of 2008, the low of December of 2008, 323, and it broke that trend line decisively. So this goes back. Let me squeeze it even more so you can see it in a bigger context. Look at this. I mean, this just goes back and back and back. Yeah, look at that. I'm still going back. 87. It goes back to 1967. I love it when they give me charts that go back so far. And look where we are. It used to be in the hundreds. We're trading right now in the 400s, and it has hit 690. I love it. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 80, S&P's down 8. But the Nasdaq is down sharp.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
I was asked how far I go back in the commodity indexes. But I go back to 19, what did I say? It was 67 or something, 76, in that commodity index that I had. But here I picked up my wrong workspace for the Dow charts. This one just goes back to the low of 2009. See this up channel? You see how the price for 3 months is just snuck above the up channel Chapman Wave inside track resistance repellent zone. That's usually a very big positive on the chart itself. But really what you need is to be able to break decisively above it and then come back and test it. So you really need to make a peak, then come back and retest and hold that line and then go to higher highs. So this is still a little early. So this is probably not the chart that I want. I'll try to find a couple of charts. We'll do some very long-term work over the next day or two. Meantime, back at the ranch, let me just do this because we've got the final segment. What I am looking at here is that there's some residual strength in the Dow. The MACD and stochastic are strong enough for me to say If the market holds very well, we'll hold above the 9-period exponential moving average. After all, this is the first time since we broke out since the 11th or 13th, whatever it was that day that we broke to the upside. This is the first time that we smashed to the upside, and the 9-period moving average hasn't been touched until today. So once you touch it, it makes it a magnet. It says, yeah, you can come back and retest it. But the quicker you can push away from it, you can go in this Chapman wave rising wedge. Not only that, in the Chapman wave cup and ladle pattern, the reason why I wanted to stay long, I'm sorry we're actually stopped out. We just got nicked. It doesn't matter. I can always jump back in. But it would only be for a quick trade to try to get to that D. But the only reason why I'm thinking this is that there's a Chapman wave in. No, this is a standard pattern. It's called a rising wedge formation. See the trend line resistance right there. You see the Chapman wave, the support level that up there. So as I'm looking at it, I'm saying if the Dow can close quite nicely after being down so sharply, like just minus 30 or minus 45 down, and the S&P down only minus 5 by the close, I think you can see the rotation help just for another few days to try to get the market high. And then I'm going to look at this and say, okay, now we might be more forward. It's time to be cautious. We start to get short. No, I have no problem with that. So have a
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.